How to be a fearless investor in 2024. My name is Bo Mannery. I'm one of the co-founders here at REIPro, along with my business partner, Chris Goff. And it's our mission here at REIPro to help educate you and provide you with the latest tools to be a successful investor.
I wanted to do something a little bit different because I'm not sure how many people, real estate's a big market. Good Lordy, it's big. Right? I mean, it's one of the basic necessities of life, right? Is just real estate. And I wanted to share with you some of the bigger factors. This will not be all of the factors. I want to really kind of point out some of the big ones that we see. And surely there are other factors. The first one, obviously, and I think everyone's aware of this, is just interest rates. If you think about it, as interest rates decline, the cost of mortgages decreases, stimulates demand for housing, elevates home prices. When mortgage rates are low, obviously, more people are more confident about getting a loan. Now, in contrast, when interest rates increase, mortgages become less affordable for many, leading to a reduction in affordability, right? So obviously, this is what we're seeing. We saw those interest rates, and I've got a chart here for you. I'm going to share with you in just a minute. But obviously, when interest rates go up, everyone's like, okay, pause, right? But there's very specific things that I'm going to share with you in this presentation. We're going to get to it shortly about what do you do as an investor when that happens. Now, obviously, this started to come down just a little bit, right? And we'll see what happens and where those trends take us. The next one is just supply and demand. So just like commodities and services, the principles of supply and demand dictate the housing market. Every real estate transaction involves a purchaser and a vendor, implying that an abundance of scarcity of homes could influence market prices either way. When there's a scarcity of supply and excess of demand, it could constitute a seller's market. Conversely, when the demand is low, the supply is high. Forms a buyer's market where prices are more likely to decrease. There's one thing that I've been saying, I think ever since I got into the business in 1999, and it's the same thing. There's so many things that are around us. Although they have influence on the market, they don't necessarily change investing into the market. I'm going to share with you what I mean by that here shortly. Next one, just the economy. Condition of the economy greatly affects the real estate market. Economic indicators such as employment figures, cost of goods and services, GDP, among others, reflect the overall economic health over a period. When the economy is thriving, home prices escalate, obviously. Conversely, home prices tend to decline due to reduced demand, diminished market confidence, lower income levels. Employment. To me, this is one of the bigger ones that I think we need to pay attention to this year. So employment closely linked to economic growth. As more people secure jobs, the affordability to purchase home obviously increases. In contrast, when unemployment rates soar, apprehensions about job security or potential economic turndown can negatively impact buyer sentiments. This often discourages individuals from venturing into the real estate market, leading to a decrease in demand. And you have to look at how that really does affect the marketplace. It really does. And I'm going to share with you some numbers and some things that we're doing that this is going to be an opportunity for a lot of people. Let me just say that. Next is inflation. Obviously, the housing market could erode the purchasing power of money, which can lead to increased prices over time. It often results in higher interest rates, making mortgages more expensive, potentially reducing household demand. Additionally, anticipated future inflation can prompt individuals to buy property sooner, driving up short-term demand and house prices. Demographics. I don't think a lot of people may think of this, and I'm just going to say it out loud here, but it represents the statistical characteristics of a population, including all aspects like age, race, sex, income levels, migration trends, and population expansion. Now, substantial demographic changes in the country can significantly influence real estate patterns for many years. These statistics, though frequently underestimated, play a crucial role in determining real estate values and demand for different kinds of properties. Then we have location. Everyone says you got to buy in the perfect location, right? Now, obviously, the value can be influenced People have preferences for specific areas or neighborhoods, which explains a considerable variation in pricing within different regions, even in short distance. Think of a home that sits on the water versus the home that is across the street. Now, these are two completely different values. Next, another big one I want you to pay attention to is government policies. So the actions of the government directly influence the value of the homes in a variety of ways. In particular, government policies can stimulate or restrict the demand for property through legislation, incentives for buyers or sellers, and regulations on real estate. Let me give you just an example. So tax deductions on mortgage interest can motivate homeowners, right? Potentially leading to a rise in home prices. Conversely, imposing tariffs on imported construction materials like lumber or steel from other countries can escalate the expenses associated with building new homes, thereby impacting the housing market and its pricing. I want to just show you, this is a 30-year trend, interest rates. I think if you've been around the block for a while, I think we heard, about the 1980s. I think that's where seller financing was actually invented in real estate. As you could see, this drop. Now, I did highlight the year 2018, which you could see on the screen at 4.54%. And then you could see it drop. And then obviously, as everybody knows, that they're starting, to instant spike back up. Now, although it's coming down a lot from where I think they were really going to expect the interest rates to be at, we're still not kind of where I think most people are used to, because I think we all have a short-term memory of where interest rates were, say, 15 years ago. I want you to look at this rental affordability. So this is from Adam Data. This is kind of shocking in a lot of different ways. Cheaper to rent in 296 countries of the 330 or counties, analyzed. That's crazy. Rental rates rising faster than home prices in 210 counties. Rental rates rising faster than wages in 197. Home prices rising faster than wages in 141 counties. Now, to me, I think that one's a little bit bigger for me as an investor in the way that we invest, for a lot of different reasons, okay, which I think we're going to get into here. Next, I just want you to look at the job loss stats. It seems like when you look at the graph overall, it's kind of consistent. It's a little bit down, a little bit up, but this is kind of crazy, these headlines that are coming out. And these are just things that I have found that I have posted on here just to share with you guys. So you can see Congressional Budget Office report on Friday forecast a rise in unemployment. They're saying it's currently 3.9, I guess, as of that date, to 4.4% by the end of 2024, signaling potential job losses for millions. There's a couple of other headlines here. Google just said, a few days ago, that they're letting go of some people. They're moving in a different direction, investing more money into more of the AI stuff. Look at Citi's going to cut 20,000. There's a lot of job loss potentials, but I'm going to show you foreclosure filings. To me, this is a pretty important number for me, because this is kind of one of my dear to my heart strategies here. I think it's one of the most rewarding strategies when you can help out. And I don't think people truly understand how many people you could help that faces foreclosure. So many people. You could see the foreclosure trends. Obviously, we go back to 07, 08, 09, 10. That's when all hell broke loose there. But as you can see, it start to dip down. We get to 2020, 2021. Now, 2020, I think these 2 years, Bo, are, that's not real good numbers, because guess what happened? Obviously, COVID came in, and guess what? They couldn't actually foreclose on people. So, of course, they did. They didn't have as many filings in those particular years. But now, with everything that I'm sharing with you, they're actually starting to see this spike up. And I think a lot of people are talking about this. If you really focus in online, just checking out news and so forth, Rob Barber, CEO at Adam, our data suggests that while foreclosure activity may fluctuate, it's unlikely to approach the highs seen in the last decade. Obviously, we go back to 2008-9. Instead, we foresee a market that is more reflective of broader economic trends, with foreclosure filings becoming a more predictable aspect of the housing landscape. The shifts over a silver lining, the opportunity for investors, homeowners, and industry professionals to plan and strategize with greater confidence. Now, as we start to see this trend, and it's not just, you have to think about, right? We have to use logic here. Why do people go through foreclosure? When you look back at, you see job losses, things of that nature, the economy, inflation, we start adding in all these factors about the housing market. This is going to happen. And here's the thing, we don't need, hundreds of millions of people to go in foreclosure. That's not what we're saying. If you just think of your own personal investment, you could help one person, you could help 10 people, you could help 20 people. That's a big deal when you're investing in real estate because of the numbers. We say it's not like you go to a job and you make, $1,000 a week. I mean, usually these paychecks are a lot bigger when you do it right. In the pre-foreclosure business, I mean, I always say the more expensive the property, the more potential profit you have. This is a business, it's always been there. It will always be there. People will always have problems. People will always go through things. So this is definitely a business that I would be paying attention to if you have not learned how this business works. Obviously, we have a ton of training videos on REIPro on this and actually walk you through this process. Bo actually pulled the Vacant properties. So this is the past 6 months from REIPro's database. From what you could see, it seems like there's really hasn't had that many changes over the last 6 months. To me, this is excellent news for investors. Now, although January did report the highest number, it's not that much higher than the previous 6. But what it shows you, it's consistent. That's the key. It's not like these properties are all, because I think if you look at the news, you look at Zillow, you look at Realtor.com, it's like, oh my gosh, we have a shortage of homes. Yeah, we're 10 years behind in construction, but these opportunities are still sitting here. So I don't pay attention to what this is saying, the news, the media and stuff. I really look at what are the facts. These are the facts that we're pulling here. And Bo actually pulled the top 5 states. Number 1, Florida, right? Now, Bo, you made a good point that obviously this could be skewed a little bit because of all the snowbirds that only live here for 6 months, right?
Yep, and they pause their mail and all that good stuff.
Texas could be the same thing. We've had so many people, from the north the last few years, they've all migrated south. And then you look at Michigan or Ohio. These 2 states actually surprised me that they came in here, but maybe I shouldn't be so surprised that California hit number 5 there. Those are your top 5 states with current. Now, when did you pull this data, Bo?
Yesterday.
January 22nd of 2024. Obviously, every state has this, right? Every area is going to be a little bit different. But what it says is the opportunities are staying consistent over the last 6 months. We could pull 12. It probably would have been similar. But that is a great sign for investors. Now, if these properties were depleting because guess what? Everybody's buying, then why are they still here? Here's the thing. I don't care how many problems that are out there, right? Everybody looks at these things as problems. I really think we're problem solvers, right? I mean, I said this for years, and it's still true today. I mean, you think about this for a second. Real estate investors are problem solvers who profit from having the knowledge to help a homeowner in a specific situation. That is what really a real estate investor is. I know people, they, get out of school and it's like, okay, I'm going to put some money, you put a down payment, you fix up the house, you either sell it or you rent it. That's what we call investing in real estate. And in the long-term scheme of things, I'm going to have cash flow, I'm going to have equity build up, the tenant's going to pay the debt down, and it all sounds great, which it is great. But a lot of people, they need to make money today, right? So not only do they need to build long-term wealth, they need to pay their bills today. You could have 10 houses, own 10 properties that cash flow $300 a month. That's only $3,000 a month. That's assuming there isn't any problems. You still have to make income. That's why a lot of people still work full time. I want people to really think about what we do. We're not these greedy individuals that come in and lowball people and take advantage and scam people. Are there investors that do that? Absolutely. But why would you ever do that? That's the thing. If you actually do it right, you could make a ton of money. I want you to think about this because I think you would agree with me on this. When a seller asks for full price and is not open to doing terms, or their home is in mint condition, or they're not eager to sell quickly, an investor is really not the buyer the seller is looking for. And it's definitely not a property an investor should be focused on. I want you to think about that because, I mean, don't get me wrong, you could obviously buy properties out there and pay full price and eventually make money on it, right? But you have to ask yourself, how much time and money are you going to devote to this when there's a sea full of opportunities? When we look at problems out there, I want you to think of where are the problems. That's where we really need to pay attention to. And we have said this, everybody says this. I think if you're just getting started, the key really to finding a great deal, right, is motivated sellers. And if we just simply define a motivated seller, refers to a property owner who is eager to sell their property quickly, often due to circumstances such as financial distress, relocation, divorce. They just need to liquidate. This urgency to sell can sometimes lead to the property being priced below market, or what I like is creating a terms deal. How much down, how much a month, how long can we do it for? Potentially creating, obviously, a good opportunity for home buyers and investors. I also, a lot of people will hear me say this, is these to me are the situations that we go through. Stop searching for houses, start searching for situations. Ultimately, that's what you're looking for because the owner determines what's going to happen with the property or not. But don't be fooled by going and saying, oh, well, there's not that many houses for sale. They're asking more than what the property is worth. Guess what? They're not motivated. They're not going probably through a situation that we're really looking for. So what are those situations? These are just ones off the top of my head. So if you look at just obviously financial distress, sellers facing a financial problem needs to sell their property quickly to alleviate their monetary burden. Job loss, which we're talking about a little bit more tonight, because to me, I think this is a bigger one, or it could be relocation. So the seller may obviously either lost the job or has a new job in a different city or even a country and needs to sell their current house as soon as possible. Think of divorce. Separating couple may need to sell that, so judges typically will force a sale on that so they can distribute those assets, an estate sale. So if someone inherits a property they don't want or can't maybe even maintain, or even maybe they can't even afford to maintain it, they become motivated sellers. Health issues. Sudden illness or long-term health issue can make managing a property difficult, prompting a quick sale. The last rehab Bo and I did, that was the exact case, was the doctor bills were adding up and they needed to sell. Retirement. Some people want to downsize. They just want to move quickly. Maybe they want to upgrade, either or they want to move. Next is just debt, right? Whether it's credit card debt, student loans, or other forms of debt they need to pay off. Their obligations can lead to a quick sale. Property damage. So if a property has suffered severe damage and the owner can't afford, doesn't want to handle the repairs, that may be motivated to sell. This, I think, falls into what we talk about, driving for dollars. This is kind of the signs that I'm looking for that damage. Why would an owner have that property that, is damaged? It's potentially vacant or is vacant. Somebody could vandalize the property. Somebody get hurt on the property. Somebody could just move into the property. We've seen all kinds of crazy stuff. Obviously, upgrading the desire to move into a larger home, neighborhood changes in the neighborhood, such as increased crime rates or declining property values, can obviously motivate a sale. Death in the family, the death of a loved one who leaves behind a property, can create a motivated seller. Tax liens, they owe back taxes. They might be motivated to sell quicker and clear the debt. Landlord, we talk about landlords, tired landlords is what we said. So I put burnout. I couldn't tell you how many properties. Actually, one of my students right now is buying 2 properties with a landlord that is burnt out. So tired of dealing with tenants, property maintenance might be motivated to sell. High maintenance costs. Cost of maintaining property becomes too high. The owner may be motivated to sell. Legal troubles. Someone facing that legal issue might need to sell quicker to cover legal costs. Market conditions. If the real estate market is expected to decline, they may choose to sell quicker, get a best price they can. Mortgage rate adjustment. If a homeowner has an adjustable rate mortgage, they're going to go up, maybe motivated to sell, especially now. Downsizing, obviously. Bad tenants, right? Kind of goes hand in hand with the landlords. Problematic tenants can make selling a rental property very appealing. Okay. And last but not least, a lifestyle change. Someone wanting to travel more can motivate someone to sell their property. That's motivation enough, right? It's not something negative happening, but it's motivating enough. So I always like to say situations really are going to determine everything. Now, what strategies? What are we focusing on? What do we see? Just, we can't go over every statistic, but I think, my point to you was to share some that I feel that are important. And the very first strategy, which probably going to be the biggest of the year, is seller financing, especially with pre-foreclosures. As they start to increase, when job loss starts to happen, you'll see more of this. This is going to start to trend up. The majority of pre-foreclosure deals that you do, you're going to utilize the strategy of seller financing. Now, you could pay cash, just pay the debt off. But this strategy is going to be used probably 99% of the time. The next one, lease options. Sounds crazy, but guess what? I want you to think about this. Interest rates, where are they? They're high. You could find properties that have a motivated seller, but they have a lower interest rate, so their payments are less. This introduces a great strategy, which we love, obviously. We talk about, we teach it, is lease options. Controlling real estate without actually owning real estate. And then even wholesaling, rehabbing, when we look at the vacant numbers, that's the data as of yesterday. The data is still holding firm on finding those potential really good deals, the ones that need a little bit of work, right? That we can turn. That still is in play. And that is another reason I still think this is going to be two really good businesses moving into this year. I think a lot of people, and what I wanted to share with people, especially for all the REIPro people we have on here, is how do you search them? Where do they come from when we talk about seller financing and lease options? So when I go into REIPro, we get into LeadPro, we start to search a specific area, zip code, county, whatever it may be. I like to target single family, but guess what? You could target anything. It obviously, depending on where you live, you might have a lot of condos, a lot of townhouses, things of that nature. Me, just personally, if we just go coast to coast, I like single family. I'm going to look for the median home price, right? So you can find this in REIPro. It's going to be right there. And I want you to go plus and minus 100 of whatever that number is. So in this example, I said the average median price is 400. I'm going to start at 300, go to 500. Could you go higher? Absolutely. But these are going to be the ideal, I would say, filters. Equity percentage. Need to have at least 50% equity into the property. I don't know if the home needs repairs. There's a lot of factors that go into it. We don't know this yet because we're just searching for deals at this point. Of course, you could exclude HELOCs and reverse mortgages as well. But here's the key. Go to the last sold date, anywhere from 2012 to 2021. So a homeowner that has a property within that time frame has a lower interest rate than what you can do today. That's big. That is a huge tip for people. You think about, why in the world would I go to the bank today with a high interest rate and buy a rental property to rent it out? And maybe my payments could be higher than the actual rent, when I can find a property with an interest rate that's already lower and take over that using seller financing. Of course, you could structure a lease option on this as well. That is really huge advantage, is to be able to put in those dates of when the homeowner actually acquired that property. Individual owned versus a company owned property. I like to talk to the people I can actually make a decision, right? Sometimes, sending material or calling companies can be very difficult. We're going to build a marketing. After we fill this list, we're going to build a marketing campaign. And then for those that are in REIPro, of course, if you're not in REIPro, you need to go check out. You can see the website at the bottom. is I like to use general number 3, or we have several letters that you can actually use as well if you like to do letters. Next is the pre-foreclosure business. To me, this is a big one. You can literally do all types of property here. Of course, I like single family. I want to see all future auction dates. We show auction dates for, of course, a period of a year because sometimes the homeowner can work out things get delayed. And unfortunately, the banks don't actually let the county know that they're not in foreclosure anymore. It's not going to go to auction. So it kind of just hangs there. So you still could have a problem. But I really want to target the people that we have time to help before it actually gets to that auction date. So future auctions, I like the estimated value to be under 100,000 of the median price. So if your median price is 4, you're going to have a minimum of 3, and then you could go all the way up. Again, if you live in certain areas, you might want to cap this out. At the end of the day, like I said before, you usually make more money with more expensive properties. Equity percentage, when I market pre-foreclosures, I want to have a minimum of 30%. There are a lot of times the homes don't need a ton of work. They're generally nicer homes. They're good people. They cared about their credit, but something happened and now they're in this mess. Individual owned, again, build a marketing campaign. I like pre-foreclosure postcard number 3. That postcard has gotten a lot of deals, by the way. Also, we like letters. So if you ask any one of my coaching students, they all do letters actually. So we've crafted a really cool letter. You can also find letters in REIPro as well. Then we talk about wholesaling rehabbing. When you go into REIPro, I want you to search for leads that are absentee owner plus vacant. That's what we call stacking the list. It has to be absentee, but it also must be vacant at the exact same time. Single family or all types really depends on you, what you're looking for. I don't really put in an estimated value, but if you want to exclude certain properties where you live, then obviously you could do that by using the estimated value. Equity percentage, minimum 50% on this. That is kind of my general bare bone minimum when I'm looking for wholesaling or rehabbing. Would you like 100%? Absolutely, right? But minimum 50. Individual owned, they can live in or out of state. Why? A lot of people, heck, I probably have even said this years ago before I got smart. If the owner lives out of state, you would think they would be more motivated to actually sell. What makes them motivated to sell? You think about, yesterday I wasn't in divorce, but today I am. I don't care if you live down the street or if you live 3 states away. If you're in a situation that's causing the motivation, you're already motivated to sell. So I want to market more properties that way. I don't want to exclude only the people that are motivated to live in state. No, I don't market them, right? No, I want to market everybody. I do like the general postcard number 3. We also have very specific letters that you could send out as well. Of course, you can import your own custom stuff in here too. With REIPro, we can help streamline this business. This right here, to me, the execution, this is where I see so many people fail. It's how do you connect the dots? How do you get off the couch to actually go do this business? Hey, Chris, I did this, but now what? This is where REIPro really can come into play if you're not a member, right? So just some basic bullet points. It's a property CRM. You could search for lead generation, you can market leads, obviously work the leads. To me, this is the execution side of it. Okay, I did this, but now what? How do I do it? How do I talk to the owner? How do I inspect the property? What am I looking for? How do I run comps? How do I generate an offer? Do I do multiple offers? How do I put under contract? That's the execution side that everybody has to know. Otherwise, it's just chalked up to a ton of education. You do nothing with it, right? All the way to closing deals, right? And obviously, you got to be educated. The last thing you want is a bunch of data and you don't even know why it's there to begin with. That's why you have to be educated on real estate strategies. You have to be educated in software just so you know where to get around. Once you get around, you're good. I want to give you some tips though. The very first thing is set clear goals. I know that sounds so generic. Everybody says set clear goals. Some people don't even know what the heck is my goal, right? Some people are like, just to get through 2024. But I want you to understand what you want to achieve in your real estate business. Whether it's a certain number of properties to acquire, maybe ROI, maybe you want to expand. I think having clear, measurable goals is really going to guide your actions and really keep you focused. And it can be simple. Don't make this complicated where you write 20 different things down. It can be very general. Obviously, embrace technology. Use tools like REIPro to streamline your operations so you can automate tasks like property searches, analysis, your management side of it. You want to, I always said the only thing you can't buy in life is time, because it's just going to keep going. We're trying to help really streamline that for people and help walk them through the process, keeping everything intact. Of course, education. Right? I don't think this ever ends. You need to stay updated on your local market trends, new investment strategies, any regulation changes where you may live. 10 webinars, read industry reports, get a coach, network with other investors. I want you to keep growing your knowledge base. And I know sometimes it can get really confusing out there. Somebody says this and somebody says that, and it's like, I don't even know where I'm going, I think you have to really just find that person that teaches you why. I always try to teach the why, because I feel that if you know why you do what you do or what you're about to do, you have a lot more confidence in yourself. And confidence really does play a big role in your success. Once you build that strong network, maybe it starts small. I always said to people, any part of the day you're like, oh God, what am I doing? What do I need to do? Just get in the car and drive. You will be surprised when you get out and start doing things, how many people you meet. Diversify maybe your portfolio. Maybe don't put all your eggs in one basket, and definitely don't want to be the investor that only knows one way. You don't want to have that one shoe fits all approach. Maybe consider mixing in a few of these strategies if you're not already using them. Maybe you change up the type of property that you're focused on. Creative marketing efforts. I want you to keep being creative in your marketing. One of my students, Alec, he actually came up with this idea, and I'm going to give him 100% credit. I was going to take a picture and show everyone, but I didn't get his permission before this. But I'll describe what we do. Not only we formulated a really good letter for pre-foreclosure, somebody that's facing this. He came up with the idea of a blue envelope with white ink. So we handwrite the address on there. Of course, we put a stamp on there. And let me tell you, he took a picture and sent it to me this morning. Looks awesome. Guaranteed that's going to get opened, by the way. 100% guaranteed. This is not going to be something that gets sorted over the trash can, I promise you. Prioritize customer service. For those that you may have a ton of rentals, just keep in mind about who's renting. Keep that excellent customer service. Everybody knows somebody that lives somewhere. So you may have a tenant that somebody they know is looking for a place. Maybe their parents are looking for a place. It can give you an opportunity to keep that relationship. Stay resilient. The real estate market has its ups and downs. The resilient part comes in. The real estate market goes in cycles and waves and all that, but it just determines the strategies that we use during those times. That's it. And I've said that so many times. Just change the strategy. And I didn't realize this till 2004. We started selling everything off because the market was getting so high. I didn't realize it would double, even triple between 04 and 05. So we started selling everything off, but that doesn't mean you don't be involved in real estate investing. No, you still grow your business. You're just changing strategies. And always keep in mind, if there's problems, there's opportunities, because you are the problem solver. I want you to know that that's what you do as a real estate investor. You fix problems, you help people, and in the process, you're making money. Every business has to make money. Otherwise, you're just not in business. Those of you that don't know, just open enrollment for my one-on-one coaching. All the information is on my website, but this is an opportunity that I love to do. I open it usually twice a year, and I take select amount of people. I do not take a lot of people because it is one-on-one with me. Well, the very first thing that I like to do is actually understand what the heck your goals are. Because if I understand where you live, what your goals are, your situation, not having 20 people in the room and listening to 20 different people's situation, just yours, I can actually create a game plan just for you. and saying, here are the steps, here's a to-do list, here's the schedule. And then you're going to get private coaching calls with me. Not only do you have my personal cell phone, you have my email. All the calls we do, I do not get into group coaching. I have students, and every single one of them lives in a different part of the country. They learn differently, and they're working usually a different strategy starting off. So having a group conversation, to me, that's not personal. And that's why I love to call it personal, because it's just me and you. We also have 4 new coaching plans, and some of them do have payment plans. If you're looking for a coach, fast track this. Obviously, this isn't the time to fail. Then go check out coaching, inquire. You can see all the information. I put everything out there. Schedule a call with me, and let's talk about your situation, how coaching can really help you in this 2024 year.